Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 4, NASDAQ off 3, S&Ps are off 6.5. Gold contract down $3.10, traded at $1,228 an ounce. Silver down 4 cents at $17.13 an ounce. Platinum up $5 and $5.50 at $1,255 an ounce. Copper up 2 pennies at $3.06 a pound. Light sweet crude flat at $80.71 a barrel. That had broken the 80 level. We'll go back. We'll take a look at that in a few. Bonds rejected lower price. Had lighter volume, up 4 ticks to 10 at 127.05. 30 up 8 ticks at 131.31. Bottom line, bonds want to go after their October 15th high, folks. King dollar down 243 ticks, trading out at 85.57. You have the euro up 37 at 127.08, and the yen is trading down 44 at 107.72. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look. And what do you have? You have a flat market. If we take a look at the SPY first, what you've had here 3 separate times intraday, folks, is that the market's trying to hang at its high each and every time up. It hasn't been able to hold that high. So what you're going to have out here is that we're going to have a higher high with lighter volume. Bottom line, we'll see whether it can close at its highs or underneath those highs. We go to the Dow Industrials, same setup in the Dow. The Dow Industrials right now are flat. They're down 3, actually. They've got to a high of 17,729. Your high on Friday was the 811 mark. We reached 729, didn't quite get that, baby. Absolutely no juice behind the move. There's no two ways about that. We go to the NASDAQ Composite. Same setup in the Composite. We have with the Composite. Got to 4489. Your high out here on Friday was the 4486. You're at 4479. Composite also is going to do very light volume. So we'll see whether you get a roll over here and, in fact, you get an acceleration on the way back down to that B point of a much larger ABC structure on the way down. And do we have an expansion with volume? Thus far, when you take a look at the S&P, folks, what you have is this. If we take a look at the cash S&P, you bring this back. We'll put this on basically a 3-year weekly. And what you're going to see is that what we've done thus far is this. We broke the uptrend that had been in place since December of 2012. And what you're doing is that we came right back up to the bottom of the break, of the channel line. We did that last week. We did a very fast, furious, no two ways about that. We went from 1882 up to 1965, that break. So when we broke down with conviction. Wide price spread, accelerated volume. You get back up to there. That's what they like to do. Bottom line is that no juice as you're coming into that trend line. Now we'll see no juice today. We'll see what happens as the market starts pulling back. Gold contract. What do we have with gold? Gold has tested twice the level of the 15th. The 15th, that's where we had the wide price spread in gold. Gold traded to a low of 1222, a high of 1250. That day, we traded, I believe, a couple 100,000 contracts. Yeah, 258,000 contracts. Last Thursday, we came down and tested that area with 140,000. Today, we're testing it with 71,000. So your correlation is 71, 140, 256. That's a good correlation. Now what you need is a rejection of price at 1226. We got down to 1227.10. It would have been nice to hit that 1226. Thus far, you do have lighter volume. The XAU and the HUI, they busted out their lows that were generated out here on the October 15th, October 8th level. The XAU is at 74.75. That has to get back inside the 75.39 area. HUI is a bit stronger. HUI also has to still get back inside the 188.33. Right now you're at 183 rather, 33. We're at 182.56. I do expect you're going to see that. You have divergence, no doubt, inside that market, but what you also have, that looks to me like a false break downtown. And what that is, specifically in the XAU and the HUI, when you break and you break lower and the volume contracts that dramatically, which it has, folks, most times you get right back inside the range. King dollar. What do we have at King dollar? King dollar is going to need more volume as it's pulling back. King dollar has pulled back 243 ticks today. Light volume, though. You're pulling back on 21,000 contracts. That 21,000 contracts is going into 32,000. So what you have out here is that what you'd need for the metal market to basically start moving topside is to get that B point, which will get tested. My take is we had an ABC structure down in the dollar. On a short-term basis, longer-term, meaning a year, 2 years, yes, wants to go higher. After the expansion that we had in the dollar, though, we went from 78.90 up to the 87 price point. We came down with volume. That high volume low on the 15th will get tested. And we'll see whether it's going to be an ABC structure on the way down. It looks to me that the dollar does want to pull back in somewhere into this 82.90 area. Some of the high volume stocks in a low volume market out here. You have Bank of America down 16. Twitter is off $1.30. We have Halliburton down 363. Schlumberger is off 419. Inside the XLE, or actually, let's go to oil first, okay? What we had with oil is this. CLZ we're dealing with. So oil out here today broke into a price point of $79.44. We've done 262,000 contracts. Now, that level is some decent volume. We got under the price points of last week. On Wednesday, we did 352,000. On Thursday, you did 351. We're at 80.73. Those lows out there were 80.03. That's the first part. Second part, that you can make the case there that, okay, listen, you got under them, you're over them now. That means it wants to go higher. That's a legit deal. However, on the 16th and the 15th, what we had is this. You had 262,000 contracts at the 79.38 low. That was on the 15th. On the 16th, you went to a lower low, 79.10. You had 260,000 contracts. We've done 262,000 thus far. You get an expansion of that volume slightly. It's subtle. There's no two ways about it. But bottom line, that's saying that oil wants to get out of the 75 area. Inside that oil and gas structure, the XLE has an expansion of volume once again. The XLE is no doubt, this is a ETF that had gone from $101 straight down to 77. You know, so we're talking, what, $34, right? Off 101, big number. You're down there with volume. You have a high volume low at $77.51. You come back topside. As we go down, folks, the high volume low is 69 million shares. You do a counter trend bounce to 26 million. The 26 million is going into 35 million. Today you get 19 million. You know, we'll see how it's going to attack at least the top of the high volume low. The top of the high volume low on the 15th is $80.77. Right now you're at $83.63. You want to bisect and dissect that a little. ExxonMobil is down $1. This is a stock that went from 105 down to let's see, down to 88. No, down to 86. Big hit, no doubt about it. If we bring Exxon back on a longer-term basis, okay, what we're going to look at, put this on 4 years, and what you're going to see with Exxon is that, number one, I suspect this high-volume low on a weekly basis is going to get tested, $86, but this thing is game into $81 also. And this morning, you know, there were plenty of folks out there saying, hey, listen, you know, ExxonMobil, great stock to buy. It's paying a 2.9% dividend. Something you always want to keep in mind, folks. That is paying a 2.9% dividend. That's at this price. Exxon goes down another $10. Guess what? Think about how long it takes to get that dividend to make up $10. It's the principle that's important, keeping the principle intact. Dow down 3, NASDAQ off 3, S&Ps are off 6. We're going to be right back, folks.
The The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials up 5. NASDAQ is flat. S&Ps are off 6.5. And when we take a look at the Tesla out here, folks, a couple of the movers out here. What you have, Tesla, TSLA. What you're going to see, Tesla is coming down, expansion of volume. I expect what you're going to see here is another ABC structure on the way down. You know, Tesla's come off its high of 291. First leg down, took it into 217.32. Now, 217.32, folks, we have 9.3 million shares traded. We're coming into that level with it 220 today. We're coming into that level with 8.3. So what it looks like is that it wants to open up at that level tomorrow, probably jump the creek And what we do have with Tesla is that's a high volume low hanging out there at 178. What is going to get interesting, there's no doubt, and we'll see how this shakes out, is that can it basically hold that level? What you do have on a fundamental issue with Tesla, which is a trip in itself, is that you had the governor of Michigan turn around and say that, no, you have to go through a middleman. So you can see the hypocrisy in the whole deal, meaning that you can say on one cheek you can say we want free enterprise, and then the next cheek and less government, and the next cheek we say, no, we're going to protect all the dealers. Pretty sick. GoPro, GPRO. Well, what do we have with GoPro? We have a GoPro out here, folks. GPRO, GP. GoPro is trading out today down $5.64, $66.24. This broke a B point. Now let's see what we have here. So 7.7 million shares, and we're at 8.7 million. So it looks like, well, at this point, I don't think it's going to do 1 million shares in all of 45 minutes. Hey, it could. Actually, it could. Yeah, actually could do that. So that, if it, in fact it does, 98 is your A point, 68 is your B, that's $30. Your C point is 684, so I give you a 54. A to B equals C to D. GoPro, the last time it had any volume is down there at the $49. I expect that you're going to more than likely see that baby get hit. PTEN, okay, Patterson Energy, they land-based drilling services. The drillers are getting killed out here today. It's pretty wild. I'm not quite sure, but they're getting killed. This is down $1.95, and this could, no doubt, could be a monster ABC structure on the way down. When I was talking about the XLE, this is not in the XLE, but what you have, this is an equity that was trading at $38. It's at 22 right now. Halliburton, Schlumberger, Halliburton's down heavy with volume expanding. Halliburton's down 363. You're at $52. That wants to go after that B point down there at the $48 level. Inside the NDX 100 today, this is what's putting the juice into the NDX 100. Right now, it's up $3, and what you have is this. Micron Tech is up $1.11. You have Yahoo up, oh, that's pretty wild. Check this out. Micron Tech's up $1.11, and so isn't Yahoo. Those are the two leaders. Exact same price point they're up. Cerner Corporation is up $135, and you got Garmin up $116. That's putting juice into the NDX 100. Taking it out is that you have Tesla down $12.91. Oh, the Tesla just got taken apart again. It's just since we talked there, that wasn't down $12 when we just hit that. Okay, so that's down more. Let's see. You have Liberty Venture down 76. Expedia is down 141, and you get Netflix off 652. If we go take a look at Netflix, see what's happening with Netflix. So Netflix had gapped away. You did a counter trend bounce. You know, Netflix wants to at least go down and test this 366 area. Right now, you're at 378. We take a look at the Dow Industrials, see what's putting juice into the Dow versus taking it out. Inside the Dow, what you have Verizon. That is up 62 cents. Travelers Insurance is up $1.16. Procter & Gamble is up 87, and you have Ma Bell up 28. Taking it away, you get Merck down 117. DuPont is off 124. Caterpillar is down 140. ExxonMobil is off 90. Big Blue, let's go take a look at Big Blue. Big Blue is trading at 161.92, and Big Blue is not only off this highs, oh, this is going to be a disaster. So check this out, folks. This is intense with Big Blue. There's no, you know, most times, okay, when I say most times, you're talking about 85, 90%. You can get a bounce on just about anything. Big Blue has just gone straight down from October 6th from 190 to 160. What it's done, however, is that it can't get away from 160, 161. Now, the way Big Blue is set up, this thing more than likely is just going to do another gap away. It wants to trade a lot lower, not a small amount lower. And this will put some heavy destruction not only into the Dow Industrials, it'll put it into the S&P and put it into the market in general. What you do have on a continual basis is you hear the mantra that, okay, Big Blue doesn't matter. There's other technology companies that matter. And you can absolutely make that case. Where the problem comes in, folks, is this, is that Big Blue is in just about every single mutual fund there is, okay? Big Blue is owned by everyone. Big Blue, I remember when Big Blue was the, basically everyone had to own it. Then I remember when it was going bankrupt. Then, of course, I remember how everyone got to own it again. The problem with that, meaning the ownership of Big Blue, has to do with the amount of downdraft Big Blue will have and the amount of downdraft that would create inside the mutual fund industry in general. That's the essence that you want to grab because of the fact that Big Blue is still such a large weighting inside the Dow Industrials. That's what it comes down to. But Big Blue wants to trade a lot lower. We take a look at the Apple. Apple hasn't been able to extend itself. It's over the highs, has no juice over the highs, but it has not been able to extend itself like it should be extending itself if, in fact, you're going to go to a much higher high. Apple closed last week. We did 258 million shares. Last high that we had our day, we did 500 million. So check this out. So you got over the high that was generated in September of 2012. That high in itself had light volume, 502 million. We got over that high last week with 358 million. This is a false break topside. That's what this is, and I suspect we're going to see how that rolls, and we're going to see how that rolls pretty quickly. The financials. Okay, so now let's get into the financials, because what the financials did show us on the downdraft that was created at the beginning of October is this. The financials stayed at nice highs, steady, not volatile, all of the above. Then what you had is that the financials dropped out of bed, had some juice behind the move on the way down. Just as the market went down very quickly, the financials went from 23.88 down to a price point of 21.55. Did it with big juice. Broke into its last swing point from 6 months ago with heavier volume. We are going up right now on 19 million versus 89 million. That's, folks, when you get numbers that are that lopsided, okay, there's no one in the store. This is pure distribution that's happening. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials right now. Dow Industrials are down 3. Nasdaq's off 1. S&Ps are off 6.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom
customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now are up 8. NASDAQ is flat. S&Ps are down 5.5. And I just heard that pronouncement for the Tiger Real Estate First Mortgage Program, folks. If you happen to be in the Tampa, St. Pete, Clearwater area, coming this Thursday night, I'm going to be doing a dinner presentation at the Bel Air Country Club. You're more than welcome to come. That's going to be from 6:30 to 8 o'clock in the evening. And what you're going to see there is that you'll see, number one, exactly the properties that we're talking about. You'll see the documents that you'll receive, meaning the mortgage note, the title insurance, the property itself, the payback. The way this works, folks, is it's a 4-year balloon note, 5% annual interest paid on a monthly basis. It's a great program if you happen to be in the CD market, if you have some extra cash that you do not need, and that's a must for 4 years. If we do sell the property within 18 months, you are still paid the full 18 months interest. I don't expect we'll be selling any of the properties that we do mortgage for 18 months, but if in fact you see an expansion in the market that goes up substantially and we get offered something, you know, it's always on the table. So you can check that out on the front page of TFNN. If you're anywhere else across the country, what you can do is that as you go over to TFNN, just on the right-hand side, hit the Tiger Real Estate Opportunity Fund banner. You'll see exactly how that works. You'll see the actual documents that you receive at the close. And if we start talking housing, okay, one of the Tigers was just bringing this up inside the den. If you go take a look at Lennar, this is going to get interesting with Lennar. Lennar, of course, is one of the home builders, one of the many home builders in the United States. This is they construct and sell single-family houses, and they're in basically the middle ground, folks, in the business, meaning in the building business. Lennar right now has taken out its swing point, took it out with volume. This swing point we're talking about here was 42.67. We're at 43.75 right now. That's the smaller issue. The larger issue is going to be interesting with all these home builders. Are they, in fact, in a much larger ABC structure on the way up, and are they going to take that baby out? Because what you have, I mean, it's about as clear as you can get. What it also is that they're very large ABC structures. The A point on Lennar is $12.39. That A point was established in August of 2011. Your B point up is at 44. So, you know, we're talking about, what, 34, 32 A to B. Your C point is 32, so that's a 64. And it's coming, you know, and you've consolidated. This is what's also happened here. You've consolidated since January of 2013. So we'll see how it goes after that high. The high that we're talking about is $44.40 on a monthly basis. On the weekly basis, it's certainly going after it with volume. What you have is this. The last high was 23 million shares. We came into that last week with 20 million shares. The week prior to that with 24 million shares. So the way that is going after it at this particular point is saying it's going to have a shot to take it over. You get up and over that level with volume, and you're going to have some real action. It's a very large ABC structure on the way up. That will take it up to the highs that were generated in 2005. That's the way this is set up right now. And in that same context, well, guess what? We know if you're talking real estate, what are you going to talk? You're going to talk interest rates. We go over to the interest rate structure right now. The 10-year is running out at a price point, 2.2 today. You know, you're talking 30-year mortgages right now at about 3.95, folks. My take, technically, on this is that this little baby not only wants the 10-year thus far. This is what we've done. We've done 833,000 contracts today. You've rejected lower price. You know, we had this came into the lows that were generated on Thursday. Thursday we had 1.4 million contracts. You got under that level, which is by one tick, rejected it, had light of volume. Now what does it want to do? It wants to make that run all the way up to the 15th, which is 130.17. You get up and over that 130.17, let me tell you something, it's going to be pretty intense. What I just did read here, now check this out, this is pretty intense. Where is the junk bond stress? No, not the junk bond. What you had is that, let me pull it this way, I get it. Let's see, TYZ4, because what this is about, you know, the Fed has primary dealers, folks, okay? And here it is right here. So, you know, this is just like trading places. As soon as Charles, this is a story I'm reading. As soon as Charles Kaminsky saw what was coming, he turned off his machine. This is real, folks, okay? It was still early in New York trading, in the New York trading day, October 15th, and investors were already pouring into U.S. government bonds as global financial markets from Asia to Europe buckled. Because yields were falling so fast, Kaminsky, the head Treasury dealer at Bank of Nova Scotia, realized he ran the risk of being stuck with losses or unwanted inventory if his computers automatically generated quotes to buy and sell with customers. So for about a half hour, as yields on the 10-year Treasury tumbled below 2%, and the biggest plummet in 5 years, he executed client orders individually over the phone. It was a very high-stress, very fearful trade, Kaminsky, whose firm is one of 22 primary dealers that trade directly with the Federal Reserve, said from his office in downtown Manhattan. Once we recognized things started getting out of control, we shut it off immediately. It was like turning the clocks back to pre-electronic trading in the 1990s. Now, what's interesting about this, folks, I don't know what the rule is on this. more than likely, reading this as it is, I suspect what it is that if you're a primary dealer, I suspect what it is that you have to have bids and offers. You don't necessarily have to keep that out there on the computer. But that being said, you can see what can happen when markets move that fast, okay? And there's no doubt that Treasury market that day was something, I don't think I've ever seen a Treasury market move like that. So what's the heads up on that? Well, the heads up on that, okay, basically goes like this. The heads up is that fast currency moves, fast debt moves are problematic in the marketplace, period. No, and that doesn't matter whether it goes up or down that quick. The reason being, and I suspect that he was a very smart dealer and trader for turning that machine off, is that the amount of trades that can come in or out, you're just basically, throwing the dice. Now, the reality inside that story would be the next thing I would ask, if in fact I'm a very large fund and a buyer and seller of bonds doing business with them, is, are you bidding at all? Because what has happened in the past, and I'm going back before computers, every time that there are downdrafts, the biggest, the biggest perception and how it was supposed to be in the New York Stock Exchange, folks, was that the market makers in the New York Stock Exchange were always supposed to take bids. Well, let me tell you something. When in fact, and there weren't computers, or there was just only a few computers, and you could send it in through computer, there was the DOT system they called them. When you threw it in through the DOT system, if you threw in more than 10,000 shares at a time, bottom line, they did not have to take it. And in fact, on downdrafts inside the marketplace, they stepped away from the bids. So the real key for the bond folks, of course, and the Treasury bond folks, is that did they step away from the bids? That's what it really comes down to. Because what tends to happen there, as you were going down, in this case, we were going down on yield, up on price, were they stepping away from buying back the Treasuries from folks that they already sold hundreds of millions of dollars to them for? That's one way. The other way, of course, is that people that are panicking, are they selling? So the real key inside that story, I think, is that, and I suspect we're going to hear more about it because this only came across the tape about 20 minutes ago, is what are the rules inside the primary dealers for the Fed, because there's 20 of them, can they actually turn off the machines and then light up the phones again? The way that story is written, it looks like you can do that. Some of the Dow stocks out here, we take a look at some of the Dow stocks. American Express is up 30 cents. You got Caterpillar down 95. Disney is flat. You get DuPont off 95 cents. Oxy's getting smoked. That's down 324. Walmart's up 15. United Technologies is up 38. 3M is up 106. If we go over to 3M first, we take a look at 3M. 3M is at highs, took its highs out. We're at 149.64, and you're over the highs. Over the highs means you can go higher. That's how that's straightened out. United Technologies, we take a look at UTX. UTX is a dead cat bounce. UTX has come down from 120. Last week, a week and a half ago, they hit 97. And we take a look at this and put this on a much longer-term basis. This very well not only wants to go lower, when you look at the volume characteristic on this, this is about as ugly as you can get. UTX is back where it was trading in August of 2013, but it looks like it wants to go to 75 bucks. We're at 104 right now. Dow Industrials right now are up 8. NASDAQ is up 1.5. S&Ps are down 475. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, we'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow up 9, Nasdaq's up 3, S&Ps are down 4. It's kind of interesting, inside the S&Ps that the other ones got positive and they just can't get up and at them. Buffalo Wild Wings. It looks like someone probably, let's see. Buffalo Wild Wings. No, that's going to be coming out. Is that coming out after the close? Yeah, it's going to be coming out after the close. So Buffalo Wild Wings right now is at 133.95, and let's see, she's coming out the 27th. Yeah, that's going to be coming out after the close. Okay, ooh, look at this, is interesting. Okay, so Buffalo Wild Wings is down from $170. You're at 133.92. We put this and take this and put this on a weekly. And you're off the highs with volume. This will be interesting watching this shake out. This is why. So watch this, folks. Buffalo Wild Wings not trading that bad right now. You're only down $1.45. 1 million shares. You're at, however, into the bar from the downdraft of October 10th. October 10th, we went from 134 to 122. You get a high volume low. That's the first part. The second part is that when that actually did that, when it broke topside November of 2013. Went from 123 to 144 with good juice, meaning we went up there with 4 million shares. Now, when we broke down, however, we broke down 4.3 million. Now, that's subtle, but that subtleness is saying that Buffalo Wild Wings wants to get down to $95. So this is going to be wild watching this whole thing shake out, particularly because the wing business itself, folks, should be really powerful in this quarter. The reason being is that it's not that, you get football season is the larger season for Buffalo Wild Wings, beer, the whole ball of wax. Twitter also, I believe, is going to be coming out with numbers after the close out here. Twitter right now is trading at 48.31. Yeah, they're coming out after the close out here today. Twitter, oh man, Twitter, check this out. This is going to be interesting watching this one. So Twitter's down $1.64. Twitter, though, has a monster. Okay, so intraday, this is so cool. Intraday, we had 34 million shares traded. The last time we were down at these levels, you did 34 million. So what Twitter's doing is that it's pushing into the swing point of $46.38 with volume around the same and expanded slightly, right? We're going to be about 1 million shares over the 34 million. That's the first part. Second part gets bigger, and what it is this. Twitter had gapped away on the last earnings call on the 29th of July. That gap is wide open to 38. Next, you go look down at the bottom. At the bottom, you get a high volume high at 29, and then we put this back, and I'll put this on a monthly basis, and on a monthly basis, bottom line wants to go test $40 at least. So it's going to be wild watching how this whole thing shakes out. What is wild about the Twitters and the Facebooks of the world, there's no two ways about that, is that the amount of advertising that they actually can sell, and what that's all about, I don't know if anyone pays attention to it. I certainly don't, because they just fire across. But what that's all about, just so you understand how that advertising business works in the social media, it is about a bureaucracy that's in place with large advertising companies that have the budgets of large corporate America, and bottom line is that the advertising agencies convince the large companies that they have to be on these properties, and they pay huge amounts of money to be on those properties, and the agencies themselves, of course, the more they place, the more percentage that they make. So it's a self-sustaining type of business model, which is absolutely wild, okay? I've seen a couple spreadsheets that would absolutely blow your mind about the amount of bread that is paid, number one, on certain sites for exposure, and, we'll see it someday. Will that work or won't it work? You know, bottom line, though, that's how that whole business is set up. So we're going to be, after the close out here, and in fact, every day this week, you're going to see a huge amount of earnings that are coming out, and we'll see how they either push the market up or push the market down. I think one of the biggest ones that we're going to have out here that will affect the marketplace, folks, and it has to do with the financials. The financials right now basically don't look to me like they want to go to higher highs. Bank of America, with Bank of America is at 1658. Technically, it has a high volume low. Fundamentally, what's going on with Bank of America right now, there's a huge fight inside the SEC as to whether inside the settlement. So they're doing a $16 billion settlement, I think. 1 second. They get $16 billion. It hasn't been written off yet. Yeah. So Bank of America, $16.7 million settlement. Now, what Bank of America is looking for, which was normal in the course of action forever, is a waiver. And the waiver that they're looking for is this. Most times that when all these banks, when just about anyone that's in the public arena is doing a settlement with the SEC, they do the settlement with the SEC and they pay all this money and they say, okay, we're not guilty. So in that context, what they can do is they can still go out and raise money on a continual basis. Well, what has happened is that the last few settlements that have got done, they're getting done, now smaller companies, not big banks, they're getting done with the aspect that they bank, in this particular case, what the sticking point is this, is that inside the SEC, there's a couple of commissioners fighting that they shouldn't be able to go out and raise money for mutual funds or hedge funds. And Citigroup had already got a waiver on it. I don't know if I don't know what the other waiver is, but the bottom line, the banks always get waivers. In this particular case, they're balking on giving Bank of America a waiver. You know, I suspect they're going to get the waiver, folks. Why? Because that's just the way the bureaucracies work. If they don't get the waiver, let me tell you something. If they don't get the waiver, you'll see Bank of America go south so quick it's unbelievable. Because that's the essence of what a bank's doing. You know, banks, they're one of the largest fee structures, no doubt, basically bringing companies public and raising money for hedge funds. That's a huge amount of their business because they have the Rolodexes. They get the Rolodexes. They certainly could raise money for themselves. There's three aspects inside most settlements, and the raising money, sending equity out or bonds out for yourself, meaning Bank of America, most times the SEC just writes that off saying, okay, you got to send it into the SEC, you got to say what's going to be in the prospectus, and the SEC will say, okay, we'll waiver this. This one here, though, is the big one, because if, in fact, they can't, well, I suspect if they don't give them the waiver, they'll probably go to court, which is long and drawn out. This is Tom O'Brien. This is TFNN. Dow Industrials up 17, Nasdaq up 4, S&Ps are down 3.5. You stay right there, folks. Come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This is a quote by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We had the Dow Industrials up 12, Nasdaq up 2, S&Ps down 2.5, gold contract down $4.20, trading at $1,222 an ounce. Silver down 6 cents at $17.12 an ounce. Platinum up $7 at $1,257 an ounce. Copper up 2 pennies at $3.06 a pound. Light sweet crude down 28 cents at $80.72 a barrel. Bonds, we had the 10-year up 4 ticks at 127.05, 30-year up 8 ticks at 141.31. King dollar down 223 ticks, trading out at a price point of 85.59. The euro is up 35 at 127, and the yen is trading down 39 at 107.77. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so Friday we get up to a price point on the cash S&P of 1965.27. We hit 1964, put 64 today. You have light volume. Can't handle the downdraft that was created on the 9th. But October 9th, folks, that's when we went from 1967 down to 1927. That's where ICE is set up. If you take a look at the SPY, you'll see this correlation, and the correlation and the SPY goes like this. As we were going south, we went south on the 9th with 210 million shares. Friday, we get up to that with 117 million shares. Today, we do 80 million shares. Bottom line, that's saying we're rolling. We're going to go test the swing low that was established out here on the 15th of October. The real key, meaning in the confirmation, is this an ABC structure on the way down, is as you roll, will you have an expansion with volume? Dow Industrials. We're going to take a look at the Dow Industrials. What you have with the Dow is this. Dow Industrials closed higher today. Friday, the high was 16,811. We're at 16,817. No juice inside the Dow. We did 748 million. We'll see whether it can handle and get up onto the 16,989. That's where ICE happens to be in the Dow. See, where the different correlation is that on the S&Ps we're at ICE. The Dow has a higher price at ICE. And what ICE specifically is, folks, is where the market just dropped off the cliff. NASDAQ Composite. Inside the composite ICE is set up at 4464. You're at 4485 right now. Composite did get to a higher high, has lighter volume. We'll see how long it can handle that higher price. NDX 100. We go take a look at the NDX 100. NDX 100 is right at ICE. NDX 100, ICE is 98.57. We're up 7 cents today. We're at 98.69. That level, we hit that today with 29 million shares. Friday, you did 43 million. That's telling me that it's not going to be able to hold this. Well, actually, I can make the case that it's 98.76, too. That was the prior day, but I'll stick with the 98.57. That's telling me that we're going to go right back inside the 98.57 level. After the close out here, BWLD, Buffalo Wild Wings, just come out with numbers, folks. Buffalo Wild Wings closed at $133. That's trading at $144. That's up $10. Numbers go like this after Buffalo Wild Wings. Their revenue was up 18.3%. Earnings per share is $1.14. They're going to, they beat their bottom line number by 7 cents. They're going to raise their prices by 3%. Don't touch this thing. What this thing is doing, folks, it gapped down on the 29th of July. 29th of July was 167. Gapped down into the 141 area. Did 4.2 million. That's going to gap back up into that area. Twitter, TWTR. Twitter just come out with numbers. Twitter closed at $48.56. This is trading at $44.73. And let's see what Twitter has to say. There she is. Okay, the earnings per share, the estimate was 1 cent. They made 1 cent. Their revenue, the estimate was 52 million. They made 68 million. So they made top line and bottom line numbers. There's something they don't like in here. That's the bottom line. Third quarter revenue, they're saying it's going to be even higher. Also, the estimate was 351 million. They're saying 360. Twitter is still trading down $4. And what Twitter does have wide open, she has a high volume swing at 46, number one, but she's going to bust that. She's going to go after the gap that was open. It is a monster gap on Twitter, by the way. The gap on Twitter was from the 29th of July. That's when it gapped higher. $37, opened up the following day at 47. So you have a $10 gap. That $10 gap is going to get filled. Gold contract, what we did with gold is this. Gold has tested 2 separate times the swing point, the high volume swing point of October 15th. October 15th, we're at 1222. You had 258,000 contracts. We tested that last Thursday with 140,000. Today we did 73,000. What we do want to see is a rejection of that lower price. Didn't hit it today. That's 1222 on the 15th. On the 23rd, it was 1226. And today we hit 1227.10. Bonds continue to want higher price. What bonds did out here, folks, is that they rejected lower price out here today, did it with lighter volume, got back into the positive. The 10 years trading 127.04, the 30 years 141.30. King dollar, we take a look at King dollar. King dollar is going to need more volume in order to get to lower price. Back down today, no doubt. Did 22,000 contracts. I do expect what you're going to see with King dollar is that it's going to go after the 84.52 level. That was the 15th. And, we'll see whether it has enough volume. October 15th, folks, is a real sweet benchmark inside the context of the bond market, inside the context of the dollar, inside the context of the metal market. Why? That was the day that, bottom line is that what we had, well, no, also inside the stock market, too. That's the low of the S&P. All of the above. Those benchmarks are going to get tested. Those benchmarks, we'll find out whether they hold price or get blown away. We take a look at Sanmina Corporation. Sanmina is I think this is a subcontractor. Yeah, it's like Jabil. It's a large subcontractor. This closed at $19.36. This is trading out here at all over the place, actually. 21. Yeah, it might be up at 21.75. It looks like it's trading at right now. Sanmina. This is how the numbers go on Sanmina. The estimate was net sales $1.63 billion. They did $1.69 billion. That's the top line estimate. Bottom line estimate was 54 cents. They have done 61 cents. Bottom line is that number-wise, after the close out here, Buffalo Wild Wings, Big WLD. Buffalo Wild Wings is up $12. It's up $9 now. It's closed at 133. It's trading at 142. Twitter, TWTR, that closed. Sorry about this, folks. Okay, that closed at a price point of 48.56. That is trading down at 44.99. Amgen is also going to be coming out with numbers. Amgen closed at 148.20. Amgen right now is trading at 148. And this is, of course, one of the largest biotechs out there. Numbers on Amgen go like this. The estimate was $2.11. They made $2.30. Bottom line estimate. Top line, let's see. Second, sees 2014. They're boosting their top line sales, still not doing nothing for the quarter. So they saw revenue at $4.96 billion for this quarter. They took in $5.06 billion. Decent numbers. Bottom line, just didn't get it going. GoPro, GPR, let's see, GPR, oh, did that baby come out? That's going to be volatile. GoPro closed at $64.91. It's trading at $65. Let me see if they come out with numbers yet. Oh, that's just volatile. You stay right there, folks. We're coming back with our Tigress, Amy Smith from IBD.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts that they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 12, Nasdaq up 2, S&P's down 2.5. And as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from Investor Business Daily. And folks, if you haven't test drove either the digital edition at investors.com or the print edition of Investor Business Daily, the newspaper, you can do that right here very easily. Come over to our website at TFNN. You're going to see the banner on the right-hand side. You hit that banner, can bring it up. You can take the choice, the print edition or the digital edition. If most folks were on computers all day long, folks, that digital edition is dynamite. They have many tools on there that can help you each and every trading day. Amy Smith, what's going on?
Hey, Mr. Tom, everything's good? Are you all ready for Halloween?
I am. I actually, we brought the kids to Hallow Scream at Busch Gardens on Saturday night.
That's so funny.
It was dynamite.
Is that where they reach out and they scare you and they do all that kind of stuff?
Oh yeah. They got well lucky down here because we get two big ones. You have the one at Busch Gardens and you have one in Disney World, Disneyland. No, Disney World down here. Yeah.
The Disney World. So is Disney World a little bit softer because the kids are younger?
I believe it is because you're supposed to be 14 to get in the Busch Gardens one, right?
Exactly, because I went to one with a friend and you know our kids, which they're not really little kids anymore, but
yeah.
They scare you pretty. Like you have zombies chasing you.
Oh yeah,
you have,
it's all about zombies and blood asylums and exactly. Yeah,
right.
Totally. I'll tell you, you know what's great? I hadn't gone on those new roller coasters in and they're dynamite, man.
Some of them, they're fun.
They are fun. I wrap my head right around those things.
As long as if I don't go upside down, I'm okay. If you just get me up and down and around, I'm all right. I just can't twirl around upside down 5 times and get off of it and stand up.
That's a fact. So, hey, listen. So upside down, top side, bottom side, market-wise, what are we doing?
I know. Well, we corrected 10% from the top. So this, our definition of it is it was an intermediate correction.
Okay.
Those are, 8 to 12% in depth. We really hadn't corrected 10% since November 2011, so we were really overdue for a decent pullback. And, it just allows the market a little bit of a breather. So last Tuesday, I missed you last week, but I was on the show Monday.
Yes.
Tuesday, we went up 2.3% on the NASDAQ, 1.9% on the S&P. We had heavier volume. So for us, that signals what we call a follow-through day.
Okay.
And it means, we're in a new uptrend. And, that NASDAQ and the S&P, they're right at the 50. That 50-day moving average.
Right.
We need them to get above that level. But, I'll tell you what, Tom, I've seen more stocks breaking out, new names, a little bit of sector rotation. This looks a lot stronger than what we've had for a while.
So what happens, folks, and this is important to understand, so inside the Can-Slim system, right, that's what you're actually looking for after correction, too, right? You're looking for newer names to break out, right?
Right. Mm-hmm.
Yeah, interesting. Okay, cool.
And you know what? It did coincide. All of a sudden, there were these new names that I really had not been paying attention to, like Illumina. There's a ton of medical names that have taken off. So it's good. We have some new blood coming into the market, and we'll have to see what some of the older names do. We got Facebook tomorrow. So we had Twitter after the close. By the way, Twitter got hit again in after-hours trading. It was down 8%. You know what was interesting? There were huge options straddle plays on Twitter because they figured it was going to be a big move, either up or down, and it moved down.
Right.
Yeah.
And it has that gap that's wide open at 38. That's going to get filled. Right now we're trading 43, I believe. Yeah, 43.40. But that gap is wide open to 38 from the July numbers. Just, that's like screaming at them.
It is. So that one got hurt.
The home builders.
The home builders have recovered. What's interesting? Last week, they gained 9%. The airlines that had been beaten down by Ebola, they gained 11% in terms of an industry group.
Yes.
So the breadth of these different industry groups was positive. Now, we had Apple did better, iPhone sales, great. Chipotle disappointed last week. They slumped. They've recovered a little bit. This genetics researcher I told you about, Illumina, has just been moving higher, beat expectations. Under Armour warned of slower apparel growth. Here we go with the big biotechs. Celgene, ticker symbol CELG, and Alexion Pharmaceuticals, ALXN. Those are looking super strong. And then we had some odd groups. This is more of a defensive play, but O'Reilly Automotive, ORLY, that one jumped, had great earnings numbers. Amazon continues to be a dog.
I know. Yeah.
With no earnings quarter after quarter. A stock that is jumping and moving. Have you taken a look at Alibaba?
I know. I like what that looks like.
That one's moving. And,
it's interesting, the Alibaba, story really has to do with empowering companies. So it's going to be interesting when they decide that they're going to start doing business in the U.S.,
And what companies are they going to buy with the money that they got from the IPO, the price offering?
Right. Forget Yahoo. They got big dollars. There's no doubt about that.
No, definitely.
Yeah. Let me ask you, I know you're the meetup coordinator for IBD. So what are the investors, when you're going around the country, what is the feeling of investors?
It's interesting. A lot of people realized that we had this correction. In fact, I just was at Santa Monica meetup last Wednesday, and everyone said, well, are we really at a bottom? And I said, hey, just take a look at the stocks that are moving higher, take a look at the indexes, and let's see what earnings season brings to us. But so far, when you see fresh names like Alibaba, and I see a ton of these medical names that are zooming higher, to me, it looks very good, and I think that the average investor sort of got a little bit more faith in it. We had a nice correction. Everyone said we needed to correct. We did correct, and I think everyone's pretty optimistic.
Yeah, so that's going to get interesting to see how this shakes out, because that means that the correction was so fast that people didn't get out, right? I mean, that would be the reality.
Well, that's the thing. Was it enough? Was the 10% enough, and are we going to roll over again? The next thing everyone needs to look for is see if we get these distribution days, these heavy days of selling. But so far, well, the Fed meets, as we know, that's that would be a catalyst tomorrow and Wednesday. If they even hint or breathe, Tom, well, we might do a little more QE if the market runs into. If they say anything like that, the market is going to take off like crazy.
I know. The market's on that crack, no doubt. No doubt. Hey, let me ask you about IDEX Labs, because you know what's interesting about this IDEX? And folks, of course, we started in Boston, but I remember this so well because there were so many shareholders, even in Boston, because this company was in Maine. It was like a $2 stock. And when you send this across, it says, oh, my God, I'm looking at this at $138.
I know. And the thing that's interesting about this, I gave you a bunch of people names. I gave you, there's Alexion and Celgene. These are all the biotechs that for people. But this company has veterinary diagnostic products. And they're pretty bullish. The stock is setting up, some nice volumes going into it. So we have to take care of ourselves, and we have to take care of our animals. So this one's an interesting one.
Oh, that's what they do. Okay, I see.
They have animal, water testing, and dairy markets. So it's for the veterinary group. So
that's because, I remember out of Boston, the people that come down from Maine, that's right, they had ranches. That's interesting. Okay.
And they have, that you see on Friday, this had monster volume going into it. It rose 7%. So this one looks pretty good. They're due to report again not till February.
So where are you off to next? Where can folks come see you?
I'm off, let's see. This week I'm in Scottsdale, Arizona, teaching.
Okay.
Next week I'm in L.A., and then after that I'm at the Vegas Money Show.
Oh, you're
the Traders Expo.
Hey, I might see you there. That's pretty good. Okay. Well, I believe I get a couple meetings there. Awesome, Amy.
Okay, great. Well, I look forward to seeing you.
Okay, have a great one. Have a safe one.
Okay, you too.
Thank you. Stay right there, folks. Come right back. Dow Industrials finished up 12. Nasdaq up 2. S&P's down 2.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 12, Nasdaq up 2, S&P's down 2.5. And as we do each and every Monday at 35 past the second hour, we have our man, Mr. Chad Coco. Chad, folks, does the best option show on the planet right here every Tuesday, 12 to 1 Eastern Standard Time, sponsored by TD Ameritrade Think or Swim. And if you haven't test drove the Think or Swim platform yet, folks, the way to do it, come over to our website at TFNN. On the right-hand side, you're going to see the banner. Hit that banner. I use it each and every day, whether you're trading options, futures, commodities, or equities. It's all on one platform. And when we're talking about a market, folks, with volatility, you have it on both sides in this market. First off, the option market itself, folks, has been trading in pennies for a long period of time. And specifically what that means is that you can get in and out of liquid equities in the option market with a penny-wide spread. Volatility-wise, pretty amazing. In fact, we haven't seen something like this for quite a while. October 8th, the VIX was at 1497. October 15th, it's at 31. And we're sitting at 1604 today. And what that does, that presents itself different strategies in order to either protect yourself, go long, and or go short. And our man Chad Coco walks you through these each and every Tuesday. You can get all that programming, folks. And you can listen to Chad right on your cell phone at tfnn.mobi. Chad Coco, what's going on?
How's it going?
Doing great, man. How you doing?
Pretty good, pretty good.
So, quite a market, right?
It is, yeah. It's earnings season, which is wonderful for us.
Yes, there's no doubt about that. So, when we look at, we get earnings one every single day right now. You have basically Thanksgiving and Christmas coming up, and you get a VIX that, no doubt, is volatile. So, what are the different strategies that we're looking at in the next few weeks?
So depends if you're looking to play something that has earnings right now or if you're looking at something a little bit farther out. So if you look towards the end of the month, where there's a lot of companies with earnings, like every day there's like 200 or so companies.
Wow.
So we can expect volatility to increase on those stocks going closer to their earnings.
Yes.
So if you have a long position on an option, even if the stock doesn't move at all coming up into those earnings, the premiums are going to increase because of that increase in volatility. And then the day after earnings, that just all comes crushing back down. So you can play around on both sides of that type of trade.
Yeah, it's pretty intense, isn't it, man?
Yeah.
I'm telling you. And what happens, folks, is that when you get a volatility crush, as Chad was just talking about, if you're on the right side of that, it's a beautiful thing because the stock doesn't have to move, but what tends to happen is that the news is out. You know, so you can picture market makers before the fact. They have to basically calculate their risk, and the risk basically can go both ways, and that's what the premium you're paying for. After the numbers come out, it gets crushed. Well, it gets crushed if they come out with their numbers.
Yeah, right.
Right? Yeah, they don't come out with their numbers, then you're seeing some action in a very large way. You know, after the close out here, today what we have is that you get Twitter out with numbers that's got that large gap. Twitter's down $4.50 right now, so it's going to be interesting to see how that one plays out. I'm sure that...
and that's within its expected move. So the straddle at the money straddle is trading for about $6.70 or so, right around there right around the close.
Okay.
So the expected move on that, like, in really easy terms, about $6. So they didn't move anywhere near what the market makers were going to expect them to do. So we'll see what happens overnight.
Yeah, no doubt, and that's pretty cool. And so Buffalo Wild Wings, BWLD. That moved, folks. Okay, that closed at 133. That's at 140 right now. That one's going to be interesting too. I mean, because it looks like all it did after the close, it went up to where it got crushed on July 30th, and now it's actually given up 4 points from then. It was trading at 144. Now we got that baby down at 140. By any chance, do you have the expected move offhand on that one?
On that one, that was expected to move about $9.65.
Ooh, so that hit it, man. Ooh, that's interesting. Yeah. Now, these expected moves, folks, okay, you don't know which way they're going to move, just so you can understand, so they get some clarity there. It has, you know what's amazing, Chad, is that, like, how the heck does that work? You know what I mean?
And market makers, they know their business.
Yeah, and what that is, folks, that's the number of bids going on, the number of offers going on. And for some reason, it seems that inside the option market, they seem to get it on a much more consistent basis, that level of movement, whether it's up or down, they get much closer to it than analysts get close to. That's for sure.
Yeah.
Yeah.
They're doing it all day, so got to hedge their positions.
Yeah. And that's the hedging of the positions makes the difference. Because what you do have happen is that all that information is out there, but someone always has more information than you have, folks. That's what it really comes down to. Now this here was going to be interesting. It's not that it's a longer option expiration, but it's one of the longest. So it's kind of neat. I mean, we're still in October. We're going to the third week of November, right?
Yeah, so if you're looking at something that doesn't have weekly options, yeah, so you have a lot of time on these options after that. I would probably not trade those right before the earnings. I'd wait till the earnings come out on those and put your position on from that point. But if you're trading something that has weekly options, that's a different situation.
Yeah, totally. Listen, folks, it's tomorrow right here at TFNN. And don't forget, all the broadcasting starts, live broadcasting, that is, at 8 o'clock in the morning. Go from 8 o'clock in the morning, 6 o'clock in the evening, and get it all right in your cell phone, tfnn.mobi. If you'd like to get us and get Tiger TV simultaneously, meaning with the video and the audio, and get Chad's screen right in front of you, great platform, TD Ameritrade. Just go to TFNN on your cell phone, TFNN.com, and you can see the Tiger TV right on the right-hand side. Just hit that TV. So, what's going on weather-wise in Chicago? Beautiful?
Yeah, 70 degrees. The leaves are all changing. It's a beautiful day.
How cool is that, man? Now, it's going to be interesting to see whether, you're going to get Joe Madden for the Cubs.
We'll see what happens.
Yeah. What are
Fingers crossed.
Is the folks there want him, yeah?
Yeah, we need something to change.
Yeah, interesting. Well, he did a good job down here, man. They just didn't have enough money behind him. I mean, that's the reality. So he had quite a record. The Rays had a terrible record. He came in, he changed the things quite a bit. So people are sad down here to see him go, no doubt.
We have to get him if we get him.
Well, what's so cool? When I was looking at it, I says, oh, this is really wild, because the guy that is running the Cubs, folks, is the guy that they brought into the Red Sox that ended up basically getting the Red Sox a world championship. You know, so it's like the analogy is there. It's like, oh man, this is pretty neat. You know.
Next year's our year.
Hey, I hope so, man. I'd like to see you guys do some action. I love that park, man.
That's beautiful.
Listen, Chad, you have a great one, a safe one. Of course, we look forward to the show tomorrow.
Well, you as well. Happy to be there.
Thanks so much. 877-927-6648. After the closeout here, Buffalo Wild Wings has given up a little. So what Buffalo Wild Wings did, BWLD, folks, is that it closed at 133. It went to 144. It's trading at 140.89. And what you're going to see there is this. That's where this thing had got smoked in July. The exact number is 141.12. I don't think it's going to make it over that number either. That's a gap away. What this will be, counter trend bounce. You go up to it, give it up again, and what you'll see, we'll see how it trades into it. What it has done thus far, and this is where it's really subtle, when it traded down and has a high volume low at 122.77. That high volume low is from October 10th, the week of October 10th. That was going into its breakout area, which is 4.1 million. Well, we did 4.3. Okay, so that's saying it's going to be back there. Okay, so now that's how you take care of the downside. How you take care of the upside is that we see how it hits the downdraft tomorrow at that August 1st downdraft. That number is 141.12. Your volume characteristic is 7.9 million. That's on a weekly basis. We did 1.4 million today. As you get up into that level, if you hit the level and fail on about 20% lighter volume on a weekly, what that will do, that'll send it right back down into the low, high volume low that was established on October 10th. That's Buffalo Wild Wings. TWTR, Twitter. Different ballgame with Twitter. What you have with Twitter is this. Twitter closed at 48.56. That was down $1.39, and it had volume on the way down. Someone knew what was going on with Twitter. Well, it was pretty clear looking at the gap also. But we had a big expansion of volume. We did 46 million shares out here. Your swing point at 46.38 was 34 million. So you had the expansion of volume going. You had a wide open gap out there from the last earnings call, which gapped up $10. So we're at 43.50. The fill in the gap is 37. That's the first part. The bigger picture for Twitter, though, is that you have a high volume low that's hanging out here at 29. So the way the Twitter is set up is, first off, I suspect you're going to get down to that $40 level. $40 level should be hard to crack on Twitter. The reason being is that was the monthly low of 2014. It was the highest high. Now, what happens is with a high volume bar, up or down, in this case we're talking down, is this. The high of the low is $40.77. The low is $28.51. As you come into the 40.72, if you come into the 40.72 with lighter volume, reject price, that's it. That's your test. You come into that bar and you get into the bar too far, meaning 4 or 5 points, 10%. See ya. It's going to get out of the bottom of that bar. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow finished up 12. NASDAQ up 2. S&P's down 1.5. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 12, NASDAQ up 2, S&P's down 2. And, folks, if you happen to be in the Tampa, Clearwater area, St. Pete area, this coming Thursday night, I'm going to be doing a workshop. That workshop, folks, is on the Tiger Real Estate First Mortgage Market. The way this works is that we are mortgaging some properties. It's a first mortgage basis. We do that. First off, we get an appraisal. We're looking for 70% of what the appraisal value is. Just to give you an idea, let's say something was $100,000, it's more, but let's say it's $100,000. That'd be a $70,000 first mortgage. We pay 5% on an annual basis, that is paid on a monthly basis. It's a 4-year balloon note, totally secured by the property, first off. If you have an interest in that, you can come over to our website at TFNN, and what you'll see right under breaking news, you'll see a free dinner presentation. That is going to be at the Bel Air Country Club. It's going to be this coming Thursday from 6:30 to 8:30. You can basically fill in your information right there. If you happen to be across the country, what you can do is this. On the homepage of TFNN, on the right-hand side, what you'll see on the right-hand side is that you'll see Tiger Real Estate Opportunity Fund. You hit Tiger Real Estate Opportunity Fund, and as you get over there, what you're going to see, it will say Smart Investing, invest in a first mortgage. Why? This opportunity, folks, is a great opportunity if you happen to be in the CD market, if you're looking for dividend income and you're looking for a secured principal investment. And this is the most important part, you do not need your cash back for 4 years. That's the kick. That's the key. Okay? And what we're doing here is that you'd be the bank. We're cutting out the middleman. That's what it really comes down to. Instead of getting 1%, 2% on a CD, you get 5% on a secured investment. It's paid monthly. What you'll see when you go to the Tiger Real Estate Opportunity Fund, first off, you can go to the first mortgage portfolio, and there'll be more up there. There's 13 of them up there right now, but I think like what 9 of them are taken right now. We have more properties, but right now you'll see that. Then what you want to do is that you want to go to the sample closing documents, because what you'll see there is the actual documents that you'll get. You'll see the mortgage and promissory note. You'll see the loan policy for the title insurance, which is really important, because with the title insurance, we have title insurance, of course, in all of these right now, but what the title insurance is doing for the lender, basically for you as the investor, is putting your name on the title insurance that you ensure that you have the first mortgage. And then you'll see the HUD example, and the HUD example, of course, is the payoff figures. The fund itself picks up all the costs. So it's a clean 5% annualized rate for 4 years. You can check it out right in the front page of TFNN. If you do happen to be in the St. Pete, Clearwater, Tampa area, you can sign up and see it in person. Market-wise out here, well, first off, let's go over to Europe, because what we had in Europe out here today is this. Our markets were flat. Europe, however, just couldn't handle it. If we go to the FTSE first, the FTSE got to a higher high. We got to 6,443. That got over the highs of last week, got right into ICE. ICE in the FTSE is 6,431. We're at 6,364, so it failed. Europe looks to me, well, FTSE first, and this will happen tomorrow morning. Now, this is going to be a huge heads up in the context. This is a heads up in the context of 6282 is the high of the low October 16th. That's really important to wrap your head around, because what we're going to see is that we're going to be going down into that level, and we're going to be testing that level tomorrow. So if the test on that level, first off, has an expansion of volume, and we get into that price, because that price, you can see that price is only, let's see, 62.82. We're talking about 63.73.83. We're talking about 80 points lower. So if we get into that price point, that brings the probability up, you get to the bottom of it. We get an expansion of volume, that says we get to the bottom of it. If we go into the top of that price and we have a contraction of volume, that would be saying that's going to reject that lower price, throw it into a consolidation. And what that would do, then that would set up, if we come over to our own S&Ps, what that would set up is that as our S&Ps come down, and the cash S&P right now would try to test the low, rather the high of the low, that would be saying that your probability would go higher, that you get a rejection of 1874 on the S&P. That's the bullish and bearish setup. We go to the DAX in Germany. We take a look at the DAX in Germany. What the DAX in Germany did today is that DAX in Germany went down 85 bucks. We're at 89.02. Now, the DAX in Germany is also going to make a run for it. This is where the DAX in Germany, the high of the low is 86.62. So that is, quite a way to go down. But the DAX moves a lot faster than the FTSE. The DAX had moved down to 88.37 today. I expect we're going to see the DAX tested in the next few days. And what that also sets up, it's the same type of scenario. So those two indices are going to be the first ones to test the highs of the lows of the larger S&P, DAX, FTSE indices. The larger issue when you're looking at the cash S&P is this. If you take a look at the cash S&P, all it's done thus far is the break that we had the week of October 3rd was wide price spread accelerated volume. When you break a market like that with wide price spread accelerated volume, that you've had a trend that has been tremendous, what you normally would do is you go back and test the channel line. Because the channel that broke is saying, okay, bottom line, cash S&P wants to get down to 1359, and we're at 1961. We've come back up to that channel line, and you came back up to that channel line with light volume. Just about tested it. The top of that channel line actually is 1979, and we got to, I'll look at that. Well, we get to 1964. 1979 is the top. Bottom line, you're testing it with lighter volume. You do the test, and then what ends up happening? Then, can't bust them up, you're going to try to bust them down. So bottom line is that that's telling me, number one, next stop on the S&P is the February 5th level. And that February 5th level is 1750 on the S&P. Right now at 1961. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.